Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of the strong upside move that began yesterday, and ES ended up testing the 98.5 to 2100.5 resistance zone, which marks the all-time high at 2100, and it is a major area of resistance, and so far the sellers have been defending that area. So heading into the open, we know that the short-term trend has been to the upside, and we know that buyers have been dominant, but our bias is going to be fairly neutral up here because the market is testing major resistance, and the risk reward for anyone initiating a new long at these areas is pretty questionable, and the market can quite easily put in a pullback off this bigger resistance, and it doesn't really affect the short-term market structure. So it's very easy to get a pullback off the 98-2100 area and pull back to, for example, 88.5 to 90.5. That wouldn't really be a big deal. And it is the initial support zone on the day, but it's still technically a fairly aggressive area of support. It marks yesterday's high. So it's not like it's a very conservative area of support. So it's very easy for the market to pull back to 88.5 to 90.5. Now, based on the overnight session, we know there's some support at 94.5 and 92. So 92 is where we got another acceleration to the upside. There's a low volume node over there, and 94.5 is the level that held as the market balanced in the overnight session. So these are really going to serve as more of reference levels for us, where we're going to be watching to see whether the market is holding 92 and 94.5 off the open or breaking below it. Because in order for the sell side to at least signal that they are stepping in, we need to see a break below 94.5 and 92 at the very minimum. Now 88.5 to 90.5, like I said, is initial support, but it is a fairly aggressive area of support. So if in the event that the market comes down and tests it, we have to assess how the market's shaping up in real time to determine whether it's worthwhile to go long there. We have to think about the risk reward. What's going to be the target off of 88.5 to 90.5? And that's the same idea even for anyone who's buying 95. What's the target? The risk reward only makes sense if the market breaks out to a new all-time high, which is possible, but most likely the sellers are going to defend that area, and they have been defending it overnight, and that can very well continue off the open into the regular trading hour session. So below 88.5 to 90.5, we have the gap fill at 86.75, followed by the previous VPOC at 86, and then we have the overnight low at 84.75. So that 84.75 to 86 area is a spot where responsive buyers can defend, they can be active. Below that we have 80.5 to 82.5, marks the top of the 2-day balance that we broke out from, all as well as the IB high from yesterday. So it's a spot where buyers can be active. And then in the event of a strong sell move, the 74.5 to 76.5 is a high probability spot for responsive buyers to be active. You have the breakout from yesterday. You also have the high volume node at 75.5. So there's a confluence of support at the 74.5 to 76.5 area, and very high odds that on first test, responsive buyers will be active there. So off the open, given that we're opening on a gap higher here, we will have to see strong upside momentum and broad market strength, participation from the other markets in order for ES to actually break out above 2100. And even if it pokes above 2100 and attempts a breakout, it doesn't mean that it can really be sustained, right? So we are going to be careful with any longs up here. And if anything, first test of that 98.5 to 2100 area was a nice short setup in the overnight session. Now we don't know if it's going to get retested or not. That's something we'll have to see off the open, but it is resistance until broken. And we just have to understand that even though the buyers are dominant and in control, we are testing major resistance, and that really puts the risk reward more on the sell side, or at least there's not a whole lot of risk reward on the buy side, given the fact that we are testing this major resistance up here. And that's why, despite the recent strength we've seen in the market, our short-term bias on the day today is still neutral. We're not extremely bullish up here because we're testing major resistance, and it's not really a great spot to be initiating new longs. You have to think about where you're going to put your stop. If you're buying 95, 96, and what your target is, and like I said, the risk reward up here is simply not that great. So off the open, we can look for longs, but only if we get pullbacks into a good area of support, and in real time, we're still seeing enough strength that it leaves the door open for a retest of the 95 or the 98 to 2100. If the market's pulling back and momentum's fairly bearish, and the AD is trending lower, and the other markets are kind of failing as well, then even 88.5 to 90.5 may not be a really great spot, because like I said, it's still fairly aggressive support, and 86, 84.75, 80.5 to 82.5, those would be more conservative areas for responsive buyers to be active. So those are the main thoughts heading into the open. That's the current market context. How the market reacts to 94.5, 92 is going to give a bit of a clue as well. Aside from that, just keep in mind that the market can attempt a breakout, but just because that's possible doesn't mean that it's highly probable, and that's why we are going to be very careful on the long side up here. If the market tests resistance again or gets a bit exhausted and we start seeing failure signs, we can even consider short setups up here. So those are our main thoughts. Let's see if the sell side can really step in here off the open, and we'll take it from there.